Having the patience to wait for major price patterns to develop. Stay tuned, traders. We're going to talk about that next. Good day, traders. Stacey Burke from Stacey Burke Trading. A beautiful sunny morning in Perth, Saturday, just at the hockey stadium. My son's got a game this morning in a few minutes. Today, talking about having the patience to wait for major price patterns to fully develop. You know, last few weeks we've talked about all the movement in the markets. And, you know, inevitably at the end of the week, you know, I keep hearing this thing in my head: amateurs open, professionals close. And, you know, Monday comes around and Monday's a funny day. Monday, I think you really have to sort of understand the ranges for the week and the price action to see whether or not Friday has given a trigger maybe for a trade on Monday. But Monday for me is a day where I wait for the ranges to set up within the day itself, based on, you know, I'll use Friday's levels and the previous week's, trading range. You know, as you've heard me talk about, I'm a big believer in the opening range. You know, the 80% of the time, Monday or Tuesday acts as a lower high for the week. And one of the things I talk about all the time is asymmetrical risk reward. And, you know, I use the daily charts, and I like to see those ranges set up where the market opens on Monday in relation to the previous week's range. But I like to use the hourly charts to try and position myself at some point for a asymmetrical risk reward, where I can, you know, look at maybe one bar as my risk for possibly a 5 or a 10 to 1 trade. And sometimes that's hard to, you know, have the patience to do. But the longer that I've been trading, the easier that gets, because, you know, again, the old axiom, amateurs open, professionals close. And, you know, we've gone over this in some of the other videos. The amount of days that Goldman Sachs makes money, 225 on average. And they've, you know, I think more than 50 days where they make over $100 million a day. That money comes from other traders. And, you know, if the banks control 60% of the market, you have to, you know, kind of think like the bank. The banks open on Monday, they close on Friday. So they need to, you know, if they control 60% of the market, they need to maneuver or create order flow where they can generate another side to their trades. So obviously they build up, you know, over the course of a few days, or maybe even be bigger time frames over daily, monthly charts, where they're building up bigger books of orders. And, you know, but Monday to Friday, they need to move the market back and forth in order to create the other side for them to take the other sides of their trades. And, you know, inevitably, you know, my round trip, one of my favorite trades, I call it the one-way ticket on a round trip. It's where they move the market, you know, Monday, Tuesday, Wednesday, into one of the previous week's buying or selling ranges, and then run the entire week back to where it started. You know, Monday's low, Monday's high, whatever. Tuesday's high, Tuesday's low, whatever the extreme was. And it's almost like at the end of the week, if there was any open orders anywhere, and, you know, they're all cleared off the books. All the orders are cleared off the books. So if you understand what that means, essentially, if they've gone to break even, or, you know, they move stops, or anything that's an order on that chart, effectively gets cleared off the books on one side. Now, next week, maybe they'll run the other side, or at some point they'll run the orders from the other side, you know, whether it's a few weeks, whatever. But effectively, when you understand that, you know, as the market auctions and builds up bigger ranges, the opportunity for you to have a range expansion exists. So if you're trading on a Monday, the range is narrow. And Monday, Tuesday, the range gets bigger. Monday, Tuesday, Wednesday, now you're talking about maybe a weekly ATR in terms of your price target. So you might be risking, you know, 16, 15 pips for 150. And that's a 10 to 1 trade. And that's the sort of stuff that, you know, again, the longer you're trading for, maybe you start to understand that it's easy to take a 15 or a 20 pip loss, or a couple of those, and then you hit, you know, 150 pip target on a couple trades in 1 week, and there's 300 pips. And this week we again generated some huge movement in the markets. And then the next part of that equation is not only just knowing that and having the patience to wait, but then the skill set to manage that trade to its fruition. And that can bring some challenges as well. And we talked about that in one of the other videos this week is, you know, you never quit learning. The market's going to throw you curveballs over and over again. But I think it's really critical to have the patience to wait for the bigger patterns to set up, because that's when you can start looking at a geometric range that has the possibility of doing a measured move expansion where you can predefine your risk by maybe 1 bar, and you're looking at a gain 5, 10, and maybe some cases even 20 to 1 as a trade profit target to risk ratio. So hopefully you got some value from today's video, traders. Have the patience to wait for the bigger patterns, the bigger price patterns to set up. And again, you know, amateurs open, professionals close. Pay attention to those daily charts. They can give you some significant information for where the major buying and selling levels are building up. So have a great weekend. Enjoy yourselves. Stay disciplined, stay focused, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.